Caroline, ARK has 2030 calls on Bitcoin, the most bullish case around 1.5 million on Bitcoin, the most bearish around 250,000 on Bitcoin. Somewhere in the middle you have around 682,200. That is the sort of base case there.
We're seeing more interest, now than ever from institutions in crypto. And by institutions, I don't mean, a lot of times people in crypto have historically meant hedge funds and venture funds. I mean asset managers and banks. So real, traditional large institutions moving into the crypto space.
Bitcoin is showing a serious indication of a possible rally, but is this bullish indication one that would take the world's foremost cryptocurrency to new heights? Cathie Wood not only thinks Bitcoin is going to reach a new high, but she also believes it'll smash the glass ceiling of $1 million per Bitcoin price. She in fact thinks it would reach $1.5 million. Now this is a crazy prediction. Some would even say it's ridiculous, but is it that crazy? Could there be some logic behind her forecast? That is what we're going to be analysing today in this video. But first, be sure to subscribe to the channel and help us rally up like Bitcoin. Now back to Cathie. First, she addresses the issue of the economy and the brewing crisis.
Commodity prices are coming down quite dramatically, some by 70–80%. And I would also say the retail call was very right. I think you'll agree on that. The discounting, we think, is going to continue to work its way through the system from the commodity price level to downstream near the consumer. And you can see this. Tesla is cutting prices. Many people say, oh, it's because of competition. No, it's because their commodity prices are coming down. And Elon's even talking about deflation. And the cost associated with innovation is coming down because it follows a learning curve. So I think the innovation that our companies are delivering are going to be one part of the deflation. Commodity prices, another. And I will also tell you, the yield curve, the week before last was down, inverted by as much more than 100 basis points. That also is a deflationary signal, as is what's now going on in the banking system. Yes. I think the banking system is fearing deflation. In the beginning of the crisis, it seemed like regulators wanted to blame crypto instead of the significant rise in interest rates and the deposit outflows. Now we're seeing it as a solution to the problem, but the regulators are still reticent. Something interesting happened today, or maybe it was yesterday. Governor DeSantis basically said that he was going to allow, I don't know if he said this exactly, but the conclusion of his saying we're going to set Florida apart from the rest of the nation was this ability to touch companies that touch crypto. After all, these are cash deposits. They're fiat deposits. They're not crypto. And this can be done on a state-by-state basis. So I think you'll see Florida, like it has done in many other ways, distinguish itself from the rest of the pack.
The Federal Reserve just raised interest rates by another 25 basis points. This 0.25% increase is coming at a time when US financial institutions are already stressed. In the first 2 weeks of March, 2 prominent banks already failed and several others are showing signs of possible failure. Experts such as Cathie Wood think inflation is coming down and the Fed should not be raising rates anymore. Unfortunately, inflation is still high despite the fact that it's subsiding. Since June of last year, inflation has continued to decline from its peak of 9.1% to its current 5.5%, but it's still a long way from the 2% the Fed wants it to be. With the additional 0.25% rate hike, we may be seeing more troubles in the financial sector, but for now, most investors are giving cryptocurrencies a side glance and considering hopping into the market. If you're also skeptical about moving into the crypto market, you have good reasons to be careful. There are a lot of variables at play right now, and regulation is a major problem. The US government wants to introduce its own digital currency, which could mean the Fed going after cryptocurrency businesses, but even the government has its own challenge. Governor of Florida, Ron DeSantis, is moving to ban the government-backed digital currency from his state. He believes the central bank digital currency, or CBDC, would kill banks and credit unions in his state. And this argument does have some merits to it, as we don't know if banks would be able to adapt to the changes fast enough. Whichever way it is, these policies would play a huge role on the cryptocurrency market.
The most dramatic example of it to us was the behavior of Bitcoin last week. It absolutely took off. It was a flight to safety vehicle. And so it is really proof of concept that innovation solves problems. There are, in Bitcoin, fully decentralized, fully transparent, auditable, which is addressing all of the banking's problems right now. And so a flight to safety, a little bit of an insurance policy. There's no central point of failure in Bitcoin. One of the things that happens in a crisis is liquidity dries up. So that tends to hurt assets. And the fact that Bitcoin moved in a very different way from the equity markets in particular was quite instructive. You'll find the building blocks of those price targets in our Big Ideas 2023. So ARC Big Ideas 2023, and they are, for the base case, I would suggest quite conservative. We've dialed some of them down since last year. I know that corporate treasuries pulled away from Bitcoin because the regulators were pulling them away from Bitcoin on their balance sheet. So we've pulled back there. But we do believe that the behavior of the price through this crisis is going to attract more institutions, for example. We've done a report targeting institutional investors and the allocation that they should make if they care about this new asset class diversifying their portfolios. And I believe it's somewhere between 2.5% and 6.5%. So not crazy. These are the sorts of allocations they would have made to emerging new categories of assets like real estate in the 70s, emerging markets and small cap in the 80s and 90s.
There's been much talk about institutional investors putting money into the crypto market for some years now, but so far that hasn't happened as we expected. That said, we are seeing events that are signaling a shift in the legal ramifications around crypto. For example, the Supreme Court of the United States has accepted the first cryptocurrency-related case in its history. This is significant because if the Supreme Court recognizes arbitration matters of cryptocurrency the way it does for other institutional businesses, then this could encourage institutional investors into investing in crypto, as they're sure of having legal precedent they can fall back on if anything goes wrong.
Well, I think they're addressing the liquidity issue, but not really the solvency issue from our point of view. A couple of things have happened here that have never happened really in history, and so the banks didn't expect it. The first was interest rates up 19-fold in less than a year. Never happened. Under Volcker, which it was twofold, 10 to 20%. And the low base does matter. Many people dismissed it saying, oh, just such a low base. No, expectations were low base. So that was the first. And we've never seen that magnitude of an earthquake, I would say. Then the second thing that no one expected, again, because it hasn't happened in such a long time, was deposits leaving the system. For Silicon Valley Bank, it was venture capital facing a funding drought, and so they had to draw down their deposits. But then for others, you've got money market funds paying much higher than deposits, attracting flows. So that combination was lethal. And so now they have the backstop in. Now what do we have? We have they're going to be paying up if they're depending on the facility. They'll pay roughly 4.37% right now is that rate, OIS plus 10. And that's much higher than many of them have been paying for deposits, number one, while in the case of Silicon Valley Bank, their average held to maturity security on the asset side of their balance sheet was only 1.6. So they're going to see net interest losses. Now, instead of having mark-to-market hit equity, these losses are going to hit earnings.
Though things are now calm, we must still remember that banks are hanging on a thread and things could still go bad in this sector. First Republic Bank is still in limbo, and we should know if it'll survive in a few days' time. Would Bitcoin reach the predicted $1.5 million price? Time will tell, but current economic situations are a huge hurdle still in the way and mustn't be ignored if you wish to invest in Bitcoin. But while you can't determine the price of Bitcoin, you can like this video and subscribe to help the channel get to the moon. Thanks for watching.